And when you are build first mode, you're able to go and test your technology really quickly and determine what works, what doesn't. Because for me, quick failure is very important.
Agnes, thank you very much for joining us today.
Wonderful to be here. Thank you for inviting me.
Now, you are co-founder of SFI, but there's so many other strings to your bow. Can you tell us a little bit about, the different things that you're involved in?
Absolutely. So I'm an investor and I'm also entrepreneur. I build in space of blockchain, and I also invest in very early stages of blockchain companies, focusing on pretty much a pretty wide spectrum of anything blockchain. As you know, the blockchain ecosystem is very early, and it's a fascinating space, so I kind of look at a wide range of it.
So how long have you been doing that?
I've been in the blockchain space late 2015, early 2016. I was very fortunate to be part of the Ethereum revolution, and it was fascinating to see how the ecosystem of Ethereum was built from pretty much nothing, from scratch, and to become what it is today.
Now, with most investors, we were just chatting earlier, you seem to be like an investor, but also an advisor. So you're looking for opportunities to invest in the blockchain world, but also be an advisor to help that company grow. Is that correct?
Absolutely. I think it's absolutely crucial, because when you look at the blockchain ecosystem, again, it's very early, it's very new. There is a lot of talented people who are very technically savvy, but in order to have a successful company and successful exit, you not only have to have a great technology, but also you have to have a good business plan, good go-to-market plan, a good compliance with different regulatory aspects. And there is sometimes thoughts around blockchain space and crypto space that regulations are still catching up with us and things like that. If you're building in real estate, you will have to comply with some regulatory requirements that applies to traditional real estate, even though you are building it on the blockchain. If you are going into decentralized finance and you're trading or designing new derivatives, there's always a law. There's already a law around derivatives that you have to comply, regardless if you're on traditional Web 2.0 or you're building on blockchain. So I think these are very important components. Also, token economics, how your token will perform, how liquidity is going to, work. So there is a lot of things as a co-founder or a founder of a new company you have to work with. It's not only just technology.
So if I get this right, you seem to be saying there is some translation between the real world and financial assets to what is in the digital world. But how do you predict what the regulation in the digital world will be as you're growing and building these companies? Isn't it tough to sort of predict, how involved some of these regulations will be? Or are we talking real, strict decentralization where you don't think there'll be as much regulation?
So it's very difficult. It's absolutely difficult. That's why I'm hoping that I understand the regulators are not trendsetters, because they simply cannot be. But I'm hoping that they are growing with the way our ecosystem of blockchain is growing, and they're learning, and they're having open conversations with different chains and different operators in that space, because it's absolutely crucial to regulate the space. Right now, I think the biggest fear I have is that there are going to be legacy regulations slapped on the very, very new technology. I think that will do more damage than help, but I also think that the best thing that could happen to a blockchain ecosystem and cryptocurrency is regulations.
Okay.
Because the more regulated it is, the more mainstream it can become, the more, more conservative institutional investors will come in, because they will feel much, much more comfortable with these new technologies, with this new asset class as well. So for me, the regulations are really a key.
Are you having conversations with, inverted commas, blockchain or cryptocurrency regulators or governments, and what are those sort of conversations like?
So most of the time the governments are really overwhelmed because the industry is moving extremely fast. Every single time they kind of turn around one corner, there's like 7 more things that just popped out, that just came into existence, and I think it's very complicated for them to keep up with it. It requires a lot of resources, it requires a lot of time, it requires deep industry knowledge, which it's complicated to kind of gain as you are following, and not, again, as we were saying about it, not a trendsetters. But I think they're doing a very good job to kind of narrowing down the issues and the liabilities that will be facing mostly retail investors.
Yeah.
So they're looking, as we were kind of touching upon this, to stable coins. They're looking into determining how the cryptocurrency market should be regulated, how the DeFi should be regulated, because again, it falls around, you know, different derivatives and you know, financial markets and Wall Street and things like that. So I think they're going to be pushing a little bit more along these lines, but for them, it's all about protecting the consumer, making sure there's no rug pulls, making sure that there is no next Luna.
Right, okay. So moving on to NFTs, I wonder if you could just talk generally about what trends you're seeing in that world at the moment.
Right now, we're all looking and we're all mesmerized by, you know, $1 million, you know, NFTs, which are which are very interesting and very fascinating.
Yeah.
The great thing about blockchain and cryptocurrency space is, in the regular industries, bubbles are bad. In cryptocurrency and blockchain, actually bubbles are good, because as the bubbles burst, they kind of you know, explode, and the little pieces of these bubbles kind of pollinate the land, and new projects and new things start growing and start changing the first approach. And so the way I'm looking at NFTs right now, it's a wonderful hype. Everybody's excited about it, but that's really just a phase one.
Right.
I think the next phase, what I'm seeing, is really utility NFTs. I am very bullish on utility NFTs. I think utility NFTs have a huge, really potential to change a lot of different industries, and very diversified industries, from movies, social media, to real estate, to insurance, to even finance, how we can in the future look into land titles, how we can look into insurance titles, how we can look into ownerships of the songs, of paintings, but also tickets, discounts, any kind of subscriptions, any kind of gated access. So I think in utility space of NFTs, we're just barely scratching the surface, and I think the next 5 years are going to be absolutely fascinating.
Well, it's interesting you mentioned those industries, because it's a lot of them seem very archaic in certain ways, in terms of land titles and laws and little property, you know, property ownership.
Yes.
But can you explain how the mechanics work a little bit when an NFT transfers ownership between two people, and how that property ownership transfers?
Absolutely. So right now, when you look at NFTs are pretty much, it's almost like a tracking of data. So when you have if I have a digital wallet and you have a digital wallet, and let's go to something very simplistic, let's say tickets. And I bought a ticket for a concert, and then I'm looking at it and I'm saying, you know what, I really cannot make it. So I can go take that ticket and transfer it to you. So whoever sold us the ticket can see it on the ledger almost instantly that it was transferred from one wallet to the other wallet. If you, for example, if we talk about art or songs,
But just with that ticket, can there be a coding within that ticket that it's non-transferable?
Yes.
Okay.
Because that's the utility.
Right.
You can literally you can go as deep to the code as it can be transferable only twice. It can be transferable only to this group of people. So you can really customize it, because that's the idea around utilities.
Because I've seen a lot of debate recently about, well, tokenization, to the extent it's in a similar vein, transforming the financial markets, in that, you know, equity was designed so that shareholders would have the same incentives as the management of the company.
Yes.
You know, that's a good way of but it does leave the consumers to one side. So there may be a way in the future where certain tokens of, let's say, Disney could not only have Disney Plus as a consumer, but have access to, you know, part equity of the company itself. And in fact, the number of possibilities are so big, but it's very hard for us to sort of try and compartmentalize.
Absolutely, and these tokens already exist, because, for example, when you look at something called social tokens, these are the tokens that I envision this in the future to be utilized by companies like Disney or Coca-Cola or others that have a lot of content. They want to do a lot of promotions. They want to not only, engage their community, but they want to grow the community and also reward the community for being loyal. So these are tokens where, like you were saying, it's part access, part equity.
So, I wouldn't pay my $14.99 to Netflix a month anymore.
Yeah.
I would just buy one token or whatever it was, and that would come with it access to their content, but also share of ownership or whatever
Exactly.
that may be.
And then on top of it, the way like for example, Netflix can structure it saying, hey, we also are doing NFT promotions. If you are holding, let's say, 1 million of our tokens, so for that we'll give you, 3 NFTs that are going to give you access to, let's say, new release of a new movie.
Right.
And that's how you engage your community, that's how you monetize your community, that's how you grow your community. And your community also becomes very portable, because every time you want to move the community somewhere else, you just go and come up with new promotion, or you go and do airdrops of tokens that will allow them to have a special access or gated access to some new thing that you're promoting or growing.
Which industries are going to start using NFTs first, do you think?
So the first, for sure, as always, as it was in Web 2.0, this is going to happen exactly the same way in 3.0, is creators. Creators build Web 2.0. Creators build Facebook and, and Instagram and all the other huge companies we're seeing on the market. This is going to happen exactly in Web 3.0. You will see a lot of creators, and I think the Web 3.0 will have a little bit different definition of a creator. Right now, the definition of creator is anyone who creates any kind of content. I think in Web 3.0, the creator will be anyone who has community. Anyone who is building community, who gather the community around whatever they are doing. And that's who is going to be building Web 3.0. And we already are seeing this from, artists, from we see pictures, paintings, creative art, or AI-generated art already coming into the market. And I think as the regulations again speed up, where you can, for example, issue your rights to a song on NFT, and every single time, let's say, I share that song with, 3,000 of my followers, everyone who clicks on it, you as an artist will get piece of the fee immediately.
So, again, I'm not an expert. I'm just trying to get my head around it. But is this pretty bad news for the companies like Facebook? Because they were such big winners from Web 2.0 that every time I took a picture of myself on holiday, it would pop up on some feed, and then my friends would look at it to look at the photo, but next to it would be an advert that Facebook was selling. But in Web 3.0, I take the picture of me on holiday and I own that.
Yes.
Okay.
So
is this bad news for these big social media platforms?
Yes. So the Web 2.0 was purely designed around those huge conglomerates or huge companies where pretty much winner takes all, and we were all convinced that pictures of our dogs and cats and children are worth absolutely nothing, and then we minted billionaires somehow, which right now actually there are a lot of different studies showing how already Web 3.0 paid I think over $1 billion to creators, and so that's pretty much that's huge. Actually, it was 3.5 billion because Facebook paid out only $1 billion this year. I think the Web 3.0, I think the number was 3.5 or 3.7, and you can see that these kind of decentralized companies are going to be really crucial in the Web 3.0. And again, your ownership is going to be very important, because also we are a little bit different generation. When you look at generation Z and generation Alpha that is coming in, they are all about...
That's the first time I've heard generation
Alpha. Oh, really?
Alpha.
Yes.
Yeah.
Okay. It's a generation Alpha. Apparently, I was told it's after generation Z. So those generations are very attached to brands, companies, or services that are aligned with their own beliefs and their own mission in life. So they want to support companies like that, and we can see more and more that this new generation grew up in the world where everything is on the iPhone and everything is shareable and everything is out there, and they want an ownership of what they produce and what they do, and they pretty much grew up with this idea of I produce content, I produce XYZ, I should own it, I should benefit from it. Right. And so we're going to move a little bit from like just purely like a gig economy to a little bit different gig economy where you can have multiple portfolios and multiple streams of income.
with all that in mind, what are the companies that you have invested in? So what requirements do you look for, whether it's in NFT or metaverse?
Yeah.
And then I'd love to finish, if we can, on what life looks like in like 12 months' time, which again is probably an impossible question, but I'm going to be just even more attached to my phone than I already am, I suppose. But
so I'm very pattern driven. So I look for certain patterns, and I've been investing in the traditional world, and I've been very early building in the blockchain space and investing right now in what's still very early blockchain space is I look for founders that are very flexible and can adapt very quickly. I look for founders that are build first mode. I look for very strong technical teams, obviously, but again, I also look for founders who are not just looking at the crypto and blockchain space and how it's shaping, but overall at the economy of the countries as we global economy, I guess, because that's how you kind of spot the patterns. That's kind of how you figure out where you fit and where the trends are going. And when you are build first mode, you're able to go and test your technology really quickly and determine what works, what doesn't. Because for me, quick failure is very important. So it's not about always success. Sometimes you have to try.
If it's not going to work, you'd rather know sooner rather than later.
And you can pivot very quickly. That's the best founders are founders that can pivot very quickly, saying we built all these things, we tested in this space, we don't think this is going to work, but we've seen this niche, so we're just going to pivot and go into that space. Because when you see even, I think Slack was the company that started as a gaming company. And now they're, a company that is really purely in communication. So pivoting quickly, failing quickly, it's really important.
Amazon just sold books. So, so lastly then, if we look 12 months ahead, and I'd love you to try and talk a little bit about the metaverse, if that is a subject you can incorporate. What is our life going to look like in your opinion? How tokenized are we going to be? How much will the metaverse play a part of our lives?
The way I envision metaverse is going to be a little bit both. It's going to be metaverse reality and also real experience world as we experience it right now, I guess. The same with NFTs. I see NFTs are going to be playing a big role in metaverse, but I think there's also a lot of physical goods that can be paired up with that. So it's going to be experience online and offline. And I think that we're going to see a lot of tokenization going forward through brands, through, like we were talking about, communities, through creators. And I see also a lot of very traditional companies that are getting into the space of metaverse and alternative AR and these experiences, and also NFTs. Like I never, like if we had this conversation 3 years ago, and if I told you that JP Morgan will have a, ATM or bank in metaverse, you would pretty much laugh at me. But here we are today, and you see brands like, Gucci and Prada and others coming into this space, and they are meshing two experiences, metaverse experience with very traditional and very, tangible goods. And I think that's the next 12 months. Who is going to, the winners will be the ones who can figure out how to bring 2.0 companies into the Web 3.0. And the way I'm looking at it, it will have to be low code, no code infrastructure. It has to be very easy, very fast, and very inexpensive. So that's where I think the next 12 months will show us who's going to build in that kind of space to build the bridge between Web 2.0 and 3.0.
Well, Agnes, this has been a really fascinating conversation, and thank you so much for all your insights.
Wonderful. Thank you for having me. I really appreciate that.